Now, as businesses and policymakers navigate evolving economic conditions, a newly released report from SAMTL Research provides crucial insights into global trade dynamics, inflation trends, and exchange rate movements. With significant implications for financial markets, investment strategies, and policy decisions, the findings highlight key challenges and opportunities that could shape the economic outlook in coming months. Joining me now to discuss this further is Dr. Patrick Ejumedia, who is Head of Research at Sterling Asset Management Trustees. Good morning to you, Dr. Patrick. Many thanks for joining us.
Good to see you.
You're most welcome. You're most welcome. Same here. Well, let's begin with, this report highlighting inflation moderation in major economies in spite of, trade uncertainties. What factors contributed to this trend?
Yeah, of course, everywhere in the world, people want to talk about inflation, and I'm sure that the reason why they talk about it is no more news. So globally, people have expected that inflation is likely to go upward in Q1 because of the US tariff policy. But unfortunately, throughout Q1, for key economies, even for Nigeria, except for March, inflation has been coming downward. And some of the factors that would have done that is, first, elevated interest rate, policy rates by most of these key economies. Then we also saw energy prices coming down, So that would have caused it. Then consumer demand, there's weakened consumer demand, because of the high policy rates that have reduced borrowing costs and all that. That has also affected demand and caused inflation to come down. Then for me, again, the pause in the policy rate for most part of Q1 too would also be a factor that has also made inflation rate to come down in Q1.
So quite a number of factors playing a role there. Exchange rate stability has been a major concern. How did Nigeria's currency perform in Q1, and what's driving that? You just had alluded to a number of factors here.
Yeah, so again, I think the CBN has been a lot of work in ensuring that they stabilize the exchange rate. First, again, we have to realize the fact that the government in its 2025 budget has said they want to keep it at 1.5, and the CBN is doing a whole lot to do that. So one of the factors, for instance, that will keep the exchange rate, if you check the trend, particularly since December 2024 till end of first quarter, even up to now, it depreciated to 1.6 at some point, but it started appreciating to about 1.599 to a dollar. Some of the factors that would have probably caused it, of course, is the transparency policy that the CBN is trying to do to encourage transparency in the FX market. Then two, there's various intervention by the CBN that we have seen. We've seen a lot of intervention, selling to BDCs and the likes and all that. And then again, we have also seen the TB rate, because the MP rate is high, and most of the rates try to, would I use the word, follow each other. So we've seen, because TB rate is high, other rates has also gone up that have also attracted FS inflows, to Nigeria. So those factors basically are some of the things that would have kept that stability in the exchange rate.
Right, and we'll get to the CBN later in the conversation. But of course, we can't have this conversation without talking about tariffs, the big topic of the last month, we'll have to say, right? The U.S. imposed 14% on Nigerian exports. Now, in what ways will this affect our trade balance and the overall economic outlook, actually?
Well, although a lot of people have a different view about what the tariff policy is going to be, and in most conversations that I've had, I've said that whether it's going to be beneficial to the US or not, we cannot tell, because it's not a science subject that people will just say, okay, you put this and this together, you're going to get this. So, but for me, as Nigerians, if you look at the amount of trade that we traded with the US in Q3 and Q4, and then use that to do some form of projection into Q1 2025 and going forward. In Q3, we did about 2.7 trillion with the US, and that's about 62% trade, majorly oil exports. And in Q4, we had a deficit with them, and our export trade to them dropped to about 48% from 62%. Now, with this tariff, what's going to happen? We're going to see likely worsen trade with the US, except we begin to diversify our trade away from the US and begin to look at other places. Or we go to begin to sit down with the US to do some form of trade negotiation. And in that case, Nigeria may not have that economic or let's say, political capacity to sit down and want to have that. And that's where the African Continental Free Trade Agreement comes into play. As a region, we can have that negotiation with the US and say, this is what we want, particularly since most of their commodities are coming to us in Africa. So it's going to have some form of impact in terms of trade, in terms of FX, inflow of FX, because if we are not exporting oil to them, we are not getting revenue, and that's also going to play on our reserve. And don't forget that reserve has been coming down throughout this quarter. So these are issues.
So you certainly see a scope for that negotiation to take place, but not unilaterally. It will have to involve...
In my opinion, I think it will be better because if individually most African countries go to want to discuss with the American government, I think it will be difficult given the economic power, financial power, and the rest. Most African countries are small countries, and they may not be able to have that discussion. But as a region, as a group, we may be able to hold a conversation with them and we'll tell them what we want.
Right, fair enough. I mean, let's look at global stock markets now, where we've seen some sort of mixed performance for Q1. What sectors are driving growth and what should investors be cautious of?
Of course, one of the sectors that drove growth in Q1 is the energy sector. Prices came down, for that sector. And we also see other sectors that went up, in terms of utilities, in terms of health and consumer health sector. We saw some form of improved performance, but we saw the energy sector come down. So those sectors are the ones that drag it, cause come of volatility movement in the global stock market. But what investors should be cautious about at this moment is, yes, for me, people are seeing a lot of opportunity in the tech space. Yes, it's good, but you have to be very, very careful because of what is happening between America, Elon Musk, and the Chinese people. So people have to be very careful. Then people have to begin to look for investments that are inflation protected, so to say, so that as a way of not being able to lose suppose inflation, we have a rebound in inflation. Then in that space, we'll be looking at, say, the agri sector, say, commodities. We've seen gold prices coming up in last quarter, and even up to now, it's about 3,000 pounds per dollar. So it's coming up. So these are some of the issues or space that investors should begin to take advantage of.
Right, fair enough. But I mean, of course, we have to look at monetary policy next, because what we see is that different policies, it basically is different across key economies. How are central banks adjusting their outlook and responses in basically in reaction to inflationary trends?
Yeah, so I think what's happening in that space, it depends on what the central banks are saying in terms of how the tariff policy is going to play out, in terms of the numbers and what are they seeing, what are the factors driving inflation. For these key economies like the US and the UK, what has been driving inflation is core inflation and service inflation, basically. But if you go to some areas, inflation is coming down. Look at China. Since COVID, they've not been able to come back strongly. So they've been trying to put up measures to drive their economy. So for them, they've been kind of holding the rate at about 3.1 throughout Q1. But in US and I think in particular UK, their rate has been at 4.5. Yes, they saw downward inflation, but they are not cutting the rate because they are looking at what is going to happen in the global space. And again, core inflation, which is also a major driver of inflation in this region.
Now, you spoke about foreign exchange reserves slightly earlier, which, of course, we've seen them decline. What does this mean for currency stability in Nigeria?
Well, two things. Yes, to some extent, it's a positive because we saw the stability in the exchange rate in the first quarter. That's what it does. But it also gives room to some speculative activities for people who would think that, the reserve is going down. At some point, maybe government is going to say, we don't think we want to continue what we are doing anymore, so let's leave it. So it may create some form of speculative activity too. But I think the positive side is that it has brought that stability that we have seen earlier in the exchange rate between, in the first quarter, basically.
Only in the first quarter?
In the first quarter. We are just starting this, we are ending the first month of the second quarter.
Okay, so you're looking, we're looking backwards as we should. I mean, but when we look at contribution to GDP expansion, what sectors have played the most part in this?
I don't think that's obvious. I think that's very obvious. That's very obvious. We've seen financial sector, and we've seen in the financial sector, we've seen the banking sector doing most of the magic. And because they are also, most of this impact do not directly impact on them. They've enjoyed high interest rates, and although people are still saying that it's going to bring about increased non-performing loans to the bank, that's one issue on one side. But the fact that most of them have enjoyed high interest rates and that has increased their margin. So that's why that sector has done well.
And many would say that, they're favored by policy as well. There is always that conversation or discussion, but then again, if you look at the power of the sector, it's sort of expected. But when we look at the commodity markets, we've seen a lot of volatility there, especially in relation to oil and precious metals. How are these fluctuations affecting or impacting African economies? So we're moving away from Nigeria now and looking wider.
Africa. Yeah, so first, we must also know the fact that Africa has, I think, two major issues. And the first issue is the type of commodity that we consume. which are primary foreign types of product that we consume. Then 2, the type of commodity that we produce, which are mostly primary products. So with this trade wars that is happening now, what you see in countries like oil-producing countries where oil price is dropping, like Nigeria that we are seeing, oil prices is going to drop, revenue will drop, we'll have issues. Countries that produce gold, because gold prices are rising, they are going to be benefiting. You know, countries that produce silver as well, because silver price too has also risen in this first quarter and even up to now. You know, gold price is around 3,000, over 3,000 per ounce now. So coming from over 2,000 in around December. So those countries that produce gold and silver, they're benefiting from, you know, the increments. You know, but those that are producing oil, like Nigeria, maybe Angola, you know, they will be suffering because that's the major source of their revenue. So that's it. So it's mixed effects, depending on what the country is blessed with, is endowed with, so to say.
And do you see this more short-term or extending a bit further now?
Yeah, so it now depends on what eventually now plays out. Like I said, there's nobody who can say this is what is going to happen, you know. But we know that logically we can say this tariff is going to cause some form of inflation. For how long? It depends on the negotiations that countries are having with the US, how long it's going to stay, and then how people are able to adjust, you know, companies, individuals are able to adjust. You know, for how long? It may require some form of analysis to be able to get there. But at least within now and this year, maybe towards the end of the year, we might begin to see a change. But within this period, I doubt if there's any change.
All right, I mean, if we look at the financial markets now, we saw shifts in investment patterns. What strategies should investors consider when looking at the wider macroeconomic environment?
So a lot of factors. I think I mentioned some of them now. The macroeconomic environment, the inflation, and that will help you know the type of sector that you want to invest in. If inflation is going to come back, you have to be very sure that you are looking at sectors that are inflation protected, so to say. You know, then exchange rates. So it depends on 1, the region that you are in, then 2, you know, the region basically, the region that you are in basically will tell you, okay, what sector, how is that sector performing? But I think what most people will look out for at this time is inflation, whether it's likely to come back, and then look for sectors that are defensive, so to say, or inflation protected.
And investors are always on the lookout for these. It's like the golden question. They just want to know, I mean, why am I going to put my funds in something that there's no promise of a return there? But, you know, we've spoken quite holistically about Q1. Let's look into your crystal ball for Q2. And what are the major risks and opportunities out there for businesses and policymakers? What should they look out for?
First, let me just pick it from where I stopped. Inflation. Is it going to come back? Everybody is saying, yes, it's going to come back because of the tariff policy and the implementation and disruption in supply. And then, second, there are going to be a lot of opportunities. I don't want to dwell so much in the inflation because that's what everybody is talking about. But opportunities will also come. Opportunities will come in terms of the value chain, agricultural value chain. That will create some form of opportunities. Opportunities will also come in terms of, let's say, trade, because, yes, some people will be saying trade is going to, the tariff policy is going to affect trade. But it will also create some form of opportunity because new markets are going to come up, you know, and some people who are able to identify those markets will also make some form of, let's say smile to the bank, so to say.
So I'm trying to get a gauge of your overall response. Are you being optimistic or simply realistic?
Both. Both, because I have to be optimistic because you are in business, you know, and when you do business, you have to ensure that, yes, you are looking at the numbers. The numbers are making you make some form of vital information about what's going to happen in the future. But again, you have to tell yourself the truth about what is happening now, and I cannot use that to then see into the future.
Right, so we need a little bit of cautious optimism in that case. Exactly. If you joined us midway, I've been chatting with Dr. Patrick Ejumedia, who is Head of Research at Sterling Asset Management Trusts. Many thanks, Dr. Patrick, for joining us, and we'll see you again very soon.